Welcome to Has Speaks Finance. Today we're looking at Carl Icahn's fascinating journey to becoming a billionaire. Forbes estimates his net worth at nearly $15.4 billion. But what's truly interesting is how he got started. He didn't inherit a fortune or, strike it rich overnight. It was a combination of savvy hard work and exploiting opportunities in a market that was, ripe for disruption. Now, Icahn started his career as a stockbroker, but not just any broker. He specialized in options, which back then were considered like the Wild West of finance. He quickly realized that most option brokers were kind of taking advantage of their clients, charging these exorbitant fees and pushing them into risky trades. So he decided to be different, to be what he called the honest broker. Icahn focused on educating his clients about options, explaining how they worked and how they could be used to, manage risk and maximize returns. He saw options as a way to ensure stock positions, allowing investors to hedge their bets and potentially profit from market volatility. This unique perspective, combined with his reputation for honesty and his client-focused approach, quickly set him apart from the competition. He was relentless, staying up late, calling clients from coast to coast, building relationships and earning their trust. By 1968, he was pulling in the modern-day equivalent of millions of dollars per year in commissions. Talk about some serious hustle. But Icahn wasn't content with just being a successful broker. He had bigger ambitions. He saw how companies were often mismanaged, their assets undervalued, and their shareholders kind of getting a raw deal. So he decided to, take matters into his own hands. He began buying up large stakes in companies that he believed were underperforming, and then used his position to agitate for change, his weapon of choice, a tactic known as greenmailing. Now, greenmailing involved acquiring a significant stake in a company, enough to pose a threat of a hostile takeover. This would often spook the company's management, who would then be willing to buy back Icahn shares at a premium just to get rid of him and avoid a potential battle for control. And this wasn't some small-time operation. We're talking millions, even hundreds of millions of dollars in profit from these greenmail deals. He was a master at identifying undervalued companies and exploiting the fear and desperation of their management. Of course, this tactic attracted its fair share of controversy. Critics labeled him a corporate raider, accusing him of being ruthless, greedy, and only interested in short-term profits. They argued that his actions, destabilized companies, hurt long-term shareholder value, and put jobs at risk. But Icahn remained unfazed by the criticism. He saw himself as a force for good, shaking up complacent companies and forcing them to become more efficient and accountable to their shareholders. He argued that greenmailing was simply a tool, a way to expose the inefficiencies and poor management that were already present in these companies. He believed that his actions ultimately benefited all shareholders by forcing companies to unlock their true value. And you know what? In many cases, he was right. Companies that were targeted by Icahn often saw their share prices soar after he got involved. They were forced to streamline their operations, sell off underperforming assets, and focus on improving their bottom line. Icahn's involvement, while often unwelcome, acted as a catalyst for change, pushing companies to perform better or face the consequences. Now, one of Icahn's most famous greenmail targets was TWA, the airline. He saw TWA as a bloated, inefficient company with a valuable route network that was being squandered by its management. He began buying up shares, eventually amassing a significant stake, and then he made his move. He threatened a hostile takeover, sending shockwaves through TWA's boardroom. TWA's management, caught off guard and desperate to avoid a takeover battle, caved to Icahn's demands. They agreed to buy back his shares at a substantial premium, giving him a hefty profit. But it wasn't just about the money for Icahn. He genuinely believed that TWA could be a successful airline again if it was run properly. After the greenmail, he continued to, influence TWA, pushing for changes in management and strategy. He even briefly served as chairman of the board, trying to implement his vision for the company. While his efforts to turn TWA around ultimately proved unsuccessful, it showed that he wasn't just a raider looking for a quick buck. He was willing to get involved, to take risks, and to try to make a real difference. As we were saying, Carl Icahn's move from corporate raider to activist investor was a fascinating one. He started taking these larger stakes in companies, aiming for a seat at the table, a position where he could truly influence the company's direction. He wasn't just looking for a quick profit anymore. He wanted to build long-term value, make companies, better, stronger, more competitive. Now, some people saw this as a genuine change of heart, a sign that Icahn was, mellowing out, becoming more collaborative. Others saw it as a kind of a strategic shift, a way to adapt to a changing financial landscape where hostile takeovers were becoming increasingly difficult. But regardless of the motivation, one thing was clear. Icahn's approach was still bold, aggressive, and often, controversial. He wasn't afraid to publicly criticize CEOs, challenge board decisions, or wage proxy battles to get his way. One of the most famous examples of Icahn's activism was his involvement with Yahoo back in the mid-2000s. Yahoo at the time was struggling to keep up with the rise of Google. It was seen as this lumbering giant, slow to innovate, losing market share. Icahn saw an opportunity, not just to make money, but to, shake things up and force Yahoo to adapt. He started buying up shares, acquiring a significant stake in the company, and then he launched this very public campaign to oust Yahoo's CEO and board of directors. He argued that they were out of touch, incompetent, and had failed to capitalize on Yahoo's potential. He even put forward his own slate of directors, including himself, to take over the company. Now, this proxy battle was brutal, with Icahn using his, media savvy and his reputation as a fearsome corporate raider to put immense pressure on Yahoo. He wrote these scathing letters to shareholders, gave fiery interviews, and even accused Yahoo's management of lying and misleading investors. This wasn't some quiet behind-the-scenes negotiations, a full-blown corporate brawl playing out in the public eye. And while Icahn ultimately failed to gain control of Yahoo's board, his activism had a profound impact on the company. It forced Yahoo to take a hard look at itself, to reevaluate its strategy, and make some much-needed changes. It also led to the eventual departure of Yahoo's CEO, paving the way for a new leadership team. So even in his activist role, Icahn wasn't afraid to ruffle feathers, to challenge the status quo, and to use his influence to force companies to change. Now, this approach obviously didn't win him many friends in corporate boardrooms, but it did earn him the respect of many investors who saw him as a champion for shareholder rights, someone who wasn't afraid to hold CEOs accountable and to fight for better returns. And this reputation as a shareholder advocate, combined with his, track record of success, gave him enormous clout. When Carl Icahn started buying shares in the company and publicly voicing his opinions, people paid attention. CEOs took his calls, boards listened to his proposals, and share prices often jumped on the news of his involvement. He'd become a force to be reckoned with, a powerful voice in corporate America, and a symbol of shareholder activism. But Icahn's evolution didn't stop there. He continued to adapt and refine his strategies, moving beyond the confrontational tactics of his earlier years and becoming more sophisticated in his approach. He began to focus on building relationships with management teams, working collaboratively to identify areas for improvement, and using his expertise and influence to, help companies unlock their potential. He also started to take a more long-term view, holding investments for years rather than months, and focusing on creating sustainable value rather than just extracting quick profits. This more nuanced approach is perhaps best exemplified by his investment in Apple back in 2013. Now, this was a very different Icahn than the one who had terrorized TWA and Yahoo in the past. He didn't launch a hostile takeover bid, he didn't publicly criticize Apple's management, and he didn't demand a seat on the board. Instead, he started buying up shares quietly, accumulating a significant stake in the company. Then he reached out to Apple CEO Tim Cook and asked for a meeting. And to everyone's surprise, Tim Cook agreed. Now, this meeting wasn't a confrontation, it was a conversation. Icahn, instead of attacking Cook's leadership, laid out his vision for how Apple could, unlock shareholder value. He argued that the company was sitting on a mountain of cash, billions of dollars, that was just sitting there doing nothing. He believed this cash could be used to buy back shares, which would boost the stock price and reward shareholders. Now, Cook listened attentively to Icahn's proposal, and while he didn't agree to everything, he was clearly impressed by Icahn's insights and his passion for Apple. And over the next few months, something interesting happened. Apple started increasing its share buyback program, exactly as Icahn had suggested. Now, was this a direct result of Icahn's influence? It's hard to say for sure, but it's clear that his involvement played a role in pushing Apple to take a more, shareholder-friendly approach. And the result, Apple stock price soared, making Icahn a tidy profit, of course, but also benefiting all of Apple's shareholders. Now, this Apple investment became a model for Icahn's later activism. He realized that he could achieve his goals, not just through confrontation, but through collaboration, through building relationships, and through, using his influence to persuade companies to do what he believed was in their best interest. And this approach proved to be incredibly successful. He made billions of dollars investing in companies like Netflix, eBay, and Herbalife, often working closely with management to improve their operations, unlock value, and generate strong returns for shareholders. But even as he became more collaborative, one thing remained constant: Icahn's unwavering focus on shareholder value. He believed that companies existed primarily to serve their shareholders, and he was relentless in his pursuit of maximizing their returns. He argued that this focus on shareholder value ultimately benefited everyone, employees, customers, and the economy as a whole. He believed that when companies were profitable and successful, everyone wins. So we've seen how Carl Icahn evolved, right? From this aggressive corporate raider to a more nuanced activist investor.
But throughout his career, there were some core principles that kind of remained consistent, some key takeaways that we can all learn from. And the first one is this. Icahn was always willing to challenge the status quo. He didn't accept things as they were, He questioned assumptions, he poked holes in conventional wisdom, and he wasn't afraid to go against the grain. He saw opportunities where others saw obstacles, right? He saw value where others saw junk. And he wasn't afraid to take risks, to bet big on his convictions, even when everyone else thought he was crazy. Now, this contrarian mindset, it's essential for any successful investor. You can't just follow the herd. You can't just buy what everyone else is buying. You have to think for yourself. You have to do your own research, and you have to be willing to be, different. The second takeaway from Icahn's career is the importance of deep research and analysis. He didn't just rely on gut instinct or market trends. He dug deep into companies, he studied their financials, he talked to industry experts, and he developed this deep understanding of their businesses. He knew the numbers inside and out, right?
He understood the competitive landscape, and he could see the potential that others missed. Now, this rigorous approach to research is something we can all learn from. Before investing in any company, it's crucial to do your homework. Don't just rely on headlines or analyst reports. Get your hands dirty, study the financials, understand the business model, and assess the company's long-term prospects. The third takeaway is the power of persuasion and negotiation. Icahn was a master communicator. He could articulate his ideas clearly and convincingly. He could build relationships with key stakeholders, and he could negotiate deals that were favorable to him and his investors. He wasn't afraid to be tough, to play hardball when necessary, but he also knew how to find common ground, to build consensus and to get people on his side. Now, this ability to persuade and negotiate is crucial in any business endeavor, especially in investing. You need to be able to, make your case to win over investors and to strike deals that create value. And finally, the fourth takeaway from Icahn's career is the importance of patience and long-term thinking. He wasn't just looking for, quick flips. He was willing to hold investments for years, even decades, if he believed in the company's long-term potential. He understood that building real wealth takes time, it takes discipline, and it takes a willingness to, ride out the inevitable ups and downs of the market. So Carl Icahn's journey is a reminder that success in investing, or in any fields for that matter, requires a unique blend of qualities. It requires boldness, intelligence, hard work, and willingness to challenge the status quo. It requires a deep understanding of business, a commitment to research and analysis, and a mastery of persuasion and negotiation. And it requires patience, discipline, and a long-term perspective. Now, not all of us can be Carl Icahn. He was a unique individual with a rare combination of talents, but we can all learn from his example. We can all strive to be more contrarian in our thinking, more rigorous in our research, more persuasive in our communication, and more patient in our approach to investing. And by doing so, we can increase our chances of achieving success in the markets and in life. So that's it for our look at Carl Icahn.
I hope you found it insightful and informative. If you enjoyed this video, be sure to check out our other videos on the channel. And don't forget to like, comment, and subscribe to HashPeaks Finance for more deep dives into the world of finance. See you in the next one.